in quarter three? More importantly, how sustainable is this performance going ahead, given the kind of moves that we're seeing in coffee prices? We have Mr. Praveen Jaipuriar, the CEO at CCL Products, joining us on the show. Morning, Mr. Jaipuriar, and thank you so much for your time. Talk to us about what has led to such good growth in the quarter gone by. It's been a beat across all fronts. So what has held out for you, and more importantly, how sustainable is this growth?
Good morning. The large part of our growth came on the back of a good, robust volume growth. We almost got 18 to 20% volume growth. And we have always guided that our, profit growths will be in line with the volume growths. However, this quarter, we also had some good, profitable or let's say higher margin contracts coming our way. The freeze-dried facility in Vietnam is now up and running, which was not there last year at this point. So all of this also added to the better, profitability margin, and therefore we had very, very robust performance as far as the bottom lines are concerned. Now, as far as the question goes that how sustainable it is, we have always guided that, in fact, a couple of years ago, we had said that for the next 3-4 years, we are looking to drive volume in the range of 15 to 20%, which means that even the operating margins and the operating profits will grow in the same way. However, there will be certain quarters where we see better contracts or better margin contracts, which may alter the margin profiles, or in some quarter we may see some more of small packs happening, which also gives us a better margin. So all of these could lead to quarterly variations here and there. But on a long term, at least for the next couple of years, our guidance remains the same, which is about having a 15-20% volume growth. And in line with that, we'll grow EBITDA also in the range of 15 to 20%.
Okay. And Mr. Jaipuriar, also talk to us about what is your outlook when it comes to coffee prices. From your commentary, we understand that green coffee prices, you're seeing them to be stabilizing. But talk to us about this entire Lunar New Year holiday season that we're seeing in Vietnam. Prices tend to soften around this time. What's the outlook once the market is back?
So the outlook remains, positive. When I say positive, it remains, good in the sense that we are looking to, further softening going forward. The Tet holidays, which is the lunar holidays in Vietnam, is about to commence next week. They'll have a 10 days of off, and before that, there is a little, selling tendencies by the farmers, which leads to some softening. We are just keeping our fingers crossed, because post-Tet holidays, we'll have to see how the prices pan out. But as far as my personal belief is concerned, I think that we will not have very massive hikes as we had seen last year. So this year looks like it will be good. And if the prices hold for the next 3 months, after which the Brazil crop will come, I think we could see a further softening of maybe 10% or so. So that's my outlook. But as we all know, for last 2 years, all the outlooks and all the predictions have gone wrong. So we all are keeping our fingers crossed and waiting for next 10-15 days to see how things pan out.
Okay, so fingers crossed on that note, Mr. Jaipuriar. But talk to us about your EBITDA per kg. Now that you're forecasting at least prices to be stable, this between 135, 140 rupees where your EBITDA per kg is right now, could this also be at these levels? Could this also sustain here, given that we're expecting stability in coffee prices?
The stability actually doesn't change our EBITDA, the prices, so as to say. Whether the prices go up or down, we try and maintain a certain kind of EBITDA. Our EBITDA, higher EBITDA per kg, the efforts are not really on the coffee prices or the green coffee prices. It's more on the operational efficiencies to get more contracts which are more profitable. So these are the endeavors, and that's how the EBITDA from maybe 120 rupees has now gone to 135, 140 rupees, and we'll continue to do all of this. But next 2 years, my guidance is that we will try and grow our EBITDA on the back of volume growths, and any upward movement in terms of efficiencies or better contracts, that will be a bonus from there. But a softening coffee prices doesn't actually, change our EBITDA per kilo per se.
Got it. And Mr. Jaipuriar, have you undertaken any pricing action in quarter three? Are you looking at doing anything on that front going ahead?
So, because we work on a cost plus model, our pricing is determined on how the green coffee is, how green coffee movements are there. So, if the green coffee prices go up, accordingly, our prices change. However, on our own brands, which is the domestic market, there the pricing has a different dimension. There, the pricing also depends on how the competition is doing things, and we are not the leaders in the category. We generally tend to follow the competition as far as pricing is concerned in the B2C segment.
Okay, and Mr. Jaipuriar, a large part about your commentary this time around has also focused on debt reduction. Debt on the books as of now for you stands at around 1450 crore rupees. You're aiming to get this down to 1250 by FY26 end, which is now about just 1.5 months away. Are you on track for this? What is going to be driving the debt lower?
Absolutely, we are on track for that. If you remember, a year ago, we were at almost at 2000 levels. Even at that point of time, I had given a guidance that subsequently, because a large part of our capacity expansion was over, a large part of our capex was over, a lot of our working capital requirement went up because of the green coffee prices that sharply went up. Now, as and when we are generating free cash flows, we are retiring the long-term debts. The working capital stresses are much better now because of the lowering of coffee prices. So all of this has led to lower debt levels, and we are very confident that we are perfectly on track towards that 1250 number by the end of this year.
Okay, so that sounds good. Mr. Jaipuria, talk to us about your domestic and branded business. Domestic has grown at 38, branded is also growing at 33%. Talk to us about how scalable is this branded opportunity and what would be your growth guidance when it comes to the branded segment?
So, we are still, yeah, we are doing very well. We are still very small, although we are now the firmly established as the number three player in the market. There are certain states and certain platforms where we are now number two as well. So this growth momentum is continuing. We are driving it very aggressively. We are putting a lot of marketing initiatives behind so that we can keep growing this segment very aggressively. And considering that we are very small, yet very small, and there is a room to grow, I think we'll continue to drive the growth anywhere between 30 to 40% and a volume of maybe 20% plus in this segment as well. So we'll continue to drive. That's the reason all the profits that we generate out of this segment, we are plowing it back to make sure that we grow aggressively in this segment as well.
Okay, so that sounds good. And lastly, Mr. Jaipuriar, before we let you go, talk to us about your exports. Do you stand to be impacted by any of the recently signed trade deals? I know you very recently said that the tariff has had no impact on the business at all. But what is your outlook on exports? And as of now, how much of the top line is contributed to by exports?
So at a group level, almost 85 to let's say 90% of our top line is exports, is B2B and private label. So it stands. So therefore, exports is very important for us. And as I had told before, that tariff per se didn't have much of an impact because we also have our facilities in Vietnam, and that gave us the option to serve some of these markets through our Vietnam entity. So so therefore it didn't have much of an impact. But lowering of tariff gives us a lot of flexibility, because now we have the option to kind of make sure that whichever is more beneficial, either in terms of profitability or in terms of logistics, we can supply from that unit. So both India and Vietnam now have become very, very competitive, and that's good news not only just for the industry but for us as well.
Okay, so that sounds very good. On that note, Mr. Jaipuriar, we'll let you go. Thank you so much for being so candid about your outlook and for dissecting your quarter three with us. It was so good chatting with you, and good luck for the quarters to come as well. Thanks so much.